But that demand and supply is actually happening in the markets. At least Bitcoin and Ethereum, those two things have very organic. Yeah, it's incredibly it's an incredibly exciting field. And it's like when you talk about say equities, all we have, unless you're an analyst from a major hedge fund where you can go into the company and talk to people, which the public don't get access to. They can't walk into a high level company, meeting and ask them questions. But in traditional markets, we're left with technical analysis, just looking at the way the price moves and ascertaining, and from that chart, how much volume is moving, all sorts of metrics around how this price is moving. Like if it's going down and it gets gobbled up, it rejects and goes higher, and you go, oh, there's demand there. So that's kind of like a secondhand inference of demand and supply. But that demand and supply is actually happening in the markets. Those are and the speculators dominate the market, right? The price action of an equity or any commodity is driven by speculators over the short term, right? And so the price can go anywhere in the short term based on this short-term speculative demand and supply. But what we look at here, like the analyst that goes into a Fortune 500, is we look at the fundamentals. I'm not interested in what the speculators are doing. I'm interested in what the investors are doing and the length of the time they're holding. So that's like looking at, the next Apple iPhone or whatnot, because like you're looking at long-term fundamentals of, will this company be profitable? Not trading these tiny speculative signals. And so this stuff is much more reliable. But it's more reliable on the longer time frames, in the multiple weeks to the macro cyclical nature. Over the short time frame, the speculators and that technical analysis on the exchanges become very much dominant. But there is this kind of intersection over multiple weeks. Maybe I put it like maybe 2 to 3 days if you're really good. With the latest metrics, we can get it down to a few days. Into the weeks where that sort of area meets technical and fundamental, the on-chain stuff, you get this kind of really interesting area where the technicals say, oh, this looks terrible, the whole thing's bearish, all the speculators are selling off, and then you can see the investors coming in and they're buying, and you just know that the speculators are going to get wrecked because the floor is put down by the investors who are buying it up. And we've seen that a number of times. It was just over a month or so ago when we were testing the $29,000 range, and everyone said it was going to 25 to 20,000, even lower, and there was unprecedented amount of accumulation, and there was no way that could have dropped down to 20 at least. Maybe 25 would have been possible for a speculative, short-term drop, but long-term, it was a very reliable signal would go up. And you can see these kind of things that happen where the technicals, they're wrong. They like, I find technicals maybe are 60% reliable, whereas the on-chain, when doing it well, you can get about 80% reliable. It is when the two disagree, the fundamentals have precedence. And so, yeah, I find that now if you're either an investor or even a speculator, you need to have some sort of look on chain to see what this other stuff is doing. So yeah, it's another toolkit that's necessary in this market, at least with Bitcoin. Ethereum somewhat. A lot of the smaller alt markets, they don't have this data readily available, and honestly, the smaller the size of the market, the less reliable or organic those fundamentals are, because the distribution of coins is very, very concentrated in those smaller markets. So like a 800-pound gorilla who owns, 1% of the supply just might hit the sell button, and like your chart and all your fundamentals that are pointing one way reverse. Whereas, at least Bitcoin and Ethereum, those two things have very organic markets where no one owns too many of the coins, so it becomes more predictable.